Although the Dow demonstrated a lot of backing and filling today, it came right back down to the T line and showed the T line to act as support. In the Candlestick Forum, we have discovered that the T line, which is the 8 exponential moving average, is an excellent trend analyzer. If you are above the T line with a candlestick bullish signal, you remain in an uptrend until you see a candlestick sell signal and a close below the T line. You use the T line as well as the 20-day moving average, the 50-day moving average, and the 200-day moving average. And because we can see graphically what is going on in investor sentiment at these important levels, you get a much firmer grasp of what's going on in a trend by seeing what type of signals you have at those important technical levels. Although the Dow traded down most of the day, that didn't really convey weakness. It just showed there was some shifting in the markets. And that shifting was pretty well confirmed by the Nasdaq trading relatively positive, up 21 points on the day, while the Dow didn't really do too much of anything on the positive side. But a couple things that occurred on the Nasdaq is it stayed above the T line, number one. Number two, it broke out above the 200-day moving average. And number three, it's right about the same level it tried to break out before, with some stochastic still having the juice left in it. It could carry us up for a few more days. And if that's the case, that allows us to take advantage of some of the patterns that are showing up and gives us the possibility of making big profits over the next few days, resulting from a pattern play. For example, with our recommendation on Baby, B-A-B-Y, we were still buying today because it's forming a nice perfect J-hook pattern where it came back and supported right here on our T line and starting back up. The J-hook pattern usually starts with a prerequisite of a very strong price trend or price move, consolidation, and then the resuming of that price move. And that next leg up is usually at least as strong as the initial leg, if not stronger. So when you can calculate that into your analysis, that if you know the market is not backing off, the patterns work very effectively because they're still going to perform themselves out of the pattern despite whether the market is flat, up, or down. They're still going to kind of maintain what's happening in the pattern. And in this case, we could be up into the $12.50, $13 area, giving us a good 25-35% return over a few weeks out of this kind of a J-hook pattern. And the visual characteristics of candlesticks, using the pattern and knowing what we know about legs, leg one, J-hook pattern, leg three, that if leg one and leg three are about equivalent, we can pretty well calculate where our next target should be, which is up here at the 200-day moving average. So on our recommendation of DCTH, a J-hook pattern that could produce a good 25-30% return, we can see where it's starting, what type of pattern it's creating, and where the potential target is. That'll be it. There should be a lot of money to be made in 2012. All you need to do is learn what the candlestick signals are telling you.